Hi guys, we're going to look at the Federal Reserve System, and your learning target is that you will be able to explain the structure of the Federal Reserve System. So what is the Federal Reserve System? Well, people in the Federal Reserve who are appointed to the Board of Governors are done so by Congress, and Congress has the ability to oversee the Federal Reserve System and its different entities. The Board of Governors, it's actually an independent agency of the federal government, so you get appointed by the president, approved by the Senate, and then you work independently, meaning the president can't fire you, Congress can call you before it, but you could also choose not to go, I guess. And then there's the Federal Reserve Banks, and we'll talk about what those are. And then there's the Federal Open Market Committee, which is made up of members of the banks, the presidents, and then the members of the board itself. So it's got three parts, the Federal Reserve: the FOMC, the Board of Governors, and then the Federal Reserve Banks. So the Federal Reserve would be considered the central bank of the United States. And if you know your U.S. history, we had one under Hamilton, and then Andrew Jackson got rid of it, and then it was brought back under President Wilson. Okay, and it has 5 functions, and those functions are: it sets the interest rates that you and I, and businesses too, use when we borrow money, whether it's a credit card or like you get a bank loan. It maintains financial stability by looking at things like interest rates and levels of unemployment. It fosters efficient payment systems. So like when you write a check, or your parents write a check at Meijer for something, it's actually the Federal Reserve that facilitates the money being taken out of your bank and then going into Meijer's bank. Okay, and then it also promotes consumer protections, and there are all kinds of things. It can be informing people of like how the banking system works, or how having high debt is bad for you, things like that. The Fed has 6 major responsibilities. The first is that it controls the money supply, meaning it literally prints our money. Not our coins, but our paper money. Second is it supplies the economy with paper money through what is called the Federal Reserve Notes. So what do I mean by controls the money? We'll get to that, but it can pull money out and it can put money in. But it also literally prints the money, okay? So Federal Reserve Notes are printed at the Bureau of Engraving, and that's done in Washington, D.C., and then it's distributed by the various Federal Reserve banks. Second is it holds bank reserves. This is money that would be too much for the bank to keep in its own vault, and so it has like its a separate vault at the Federal Reserve at the different district banks, which we'll talk about. Okay, and you do this because if you think about it, you don't want to have too much money in your vaults because that would make you a potential target for theft. Okay, and then they also act as the reserve accounts for like checking. It's like a checking account for the bank. That's what the Federal Reserve does. Another example. Like I said, they provide the check clearing services where, like, again, you write a check at Meijer, and then it's the Federal Reserve that gets the money from your bank and then puts it in Meijer's bank. They also supervise the member banks. So if the Fed finds that a bank's not following established banking standards, like keeping 10% of their deposits in their vault, they'll make sure that they do. And then last is they serve as the lender of last resort for banks that are suffering from cash management problems. Number 6 is a big deal because this is put in place because of what happened in the Depression, where banks were closing because they didn't have enough money. Now banks can always go to the Fed rather, and get money, borrow money. So the U.S. has a kind of a unique, well, not kind of, it has a unique approach to central banking. So the framers of the Federal Reserve Act, and I don't mean the framers like Benjamin Franklin, I'm talking about 1913, 14, 15, 16, and 17, they purposely rejected the concept of a single central bank. So what they did instead was they provided for a central banking system, and it has 3 features. One, it's got the Central Banking Board, which meets in Washington, D.C., and then a decentralized operating structure of 12 reserve banks over, at the time, it would have been 48 states. Now there's 50, obviously. And then a combination of like public and private characteristics makes up this institution. So although parts of our Federal Reserve System, they do share some characteristics with like private sector entities, meaning like banks. The Federal Reserve, it was established specifically to look after the public's interest. So it's not designed to go after making a profit. That's not what it's for. It's designed to keep things stable in our economy. So how it does this is through 3 key entities: the Board of Governors, the Federal Reserve Bank, or reserve banks, and then the Federal Open Market Committee, which is also referred to as the FOMC. This is the current Board of Governors, Okay, there's Jerome Powell, he's the chair. Richard Clarida is the vice chair. Randall Queries is the vice chair. Notice how it says vacant. These are positions which have not yet been filled. So President Biden, he'll be able to appoint these. If they're approved by the Senate, they'll take their spot. Okay. Then we have these two people who are current governors. These would have been people that were appointed under President Trump, but it carries over. Remember, they're independent. And then we have, these are the Federal Reserve Bank presidents. So there's 12 of them. So 6 and 6. You don't need to know any of their names for the test. Okay. This is the Federal Reserve Board. It meets in Washington, D.C., and it governs the Federal Reserve System. And it has 7 members. They're called governors, and they are nominated by the President of the United States, and then they are confirmed by the United States Senate. And the board, the Board of Governors guides the operation of the Federal Reserve System in totality. And so it promotes its goals, and it fulfills the responsibilities that the Federal Reserve is given by the congressionally approved Federal Reserve Act. Now, all of the members of the Board of Governors will serve on the FOMC, and they're the body that does things like sets the monetary policy, which we'll get into later, but it's a big deal. So how do you get appointed to the board? Well, each member of the Board of Governors, they're appointed to a 14-year term. So the terms are staggered so that one term expires on January the 31st of each even-numbered year. So after serving your full 14 years on the 14-year term, you cannot be reappointed. So it's one and done. Okay. So if a board member leaves or they die or whatever, before their term expires, the person, another person can be nominated and then confirmed, and they can fill out the remainder of that person's term. Okay? And then that person could be themselves appointed to a full 14-year term. So like if a person died 2 years into their term and somebody is appointed to replace them, they would have that full 12 years, and then they could be appointed for another 14-year term. I'm not really sure about how many times that's happened in its history, but I would assume that it hasn't happened enough, and that's why we haven't had changes to this policy. But again, it's presidential appointment, Senate approval. There's 7 members on this Board of Governors, and they serve for 14-year terms. This thing you do need to know, the right-hand side. So the chair and the vice chair of the board, these guys or people are appointed by the president, and they are confirmed by the Senate, and they serve for a 4-year term, and they can be reappointed to an additional 4-year term. It doesn't say 4-year term, it says 4-year terms. So you could be appointed to a 4-year term repeatedly. So you could be appointed as chairman of the Federal Reserve multiple times, and that's actually been the case in the past. The nominees to these posts, they already have to be members of the board, or they have to be simultaneously appointed to the board, meaning let's assume that Jerome Powell was already on the board of governors, and then when President Trump is elected, he elevates him to the position of chairman of the Federal Reserve. Or what could happen is, let's assume that there was a vacancy on the governor's board of governors rather, and so President Trump appoints someone to fill that vacancy and also makes that person the chairman. So they would serve for 14 years as a governor of the board, but they would be the chair for 4 years as well. Now they can be reappointed depending on the president. Remember though, presidents can only serve for 8 years max. So a person who's appointed serves for 14 years, so they could be the chairman for 4 years, or possibly 8 years, and then there's another president that comes in, maybe they're from the opposing party. They can't make that person leave their job as a governor, but they can not reappoint them as the chair, the Federal Reserve chair. Okay? So the board has lots of responsibilities. First, they oversee the operation of the 12 reserve banks, and shares with them the responsibility for supervising and regulating certain financial institutions and activities across all 50 states and the U.S. governments, or the U.S. territories as well. The board also provides just general guidance and direction and oversight of the entire federal banking system, which lend to banks. They're called depository institutions, and then others as well. When the reserve banks provide financial services to depository institutions and also to the federal government itself. Now, that means that the board has oversight, which means that Congress will call upon it to come and provide testimony. This is to the House and to the Senate. And because the because the Board of Governors is got somebody who leads it, that's the chairman and the vice chair, those are the people that would go to Congress and report. Okay. The board has the broad oversight responsibility of operations and activities for the Federal Reserve banks, and this is given to it by congressional law. This authority includes the ability to oversee the Federal Reserve's services to banks themselves, to the U.S. Treasury, and the Federal Reserve's examination and supervision of various financial institutions. What that really means is the Federal Reserve can go in, the Board of Governors, they can go in and they can physically check that you have whatever the percentage of money you're supposed to have, or they can check to make sure, verify, that the amount of money that you claim to have on hand is the actual amount that you have on hand. So it keeps a level of honesty within the financial and banking system. So also, as part of its oversight, the board reviews and it approves the budgets of each of the reserve banks. And so this is a whole carrot and stick approach. As long as you're doing what you're supposed to do, you'll most likely get the budget that you require. However, if you're not following the recommendations or the rules, then this is a way of punishing and keeping the reserve banks in line. Remember, there's 12 of them. And so the board also helps to ensure that the voices and the concerns of consumers, you and me, and then just the community overall, are heard by the central banks, the 12 central banks, when they're conducting their consumer-focused supervision, their research, and their policy analysis. And more generally, just by promoting a fair and transparent consumer financial services market. Remember how we talked about like what sets interest rates? Well, this is how we know about it, is because the board reports on these things. Okay, they simplify things so people can understand what otherwise it is a complex system. All right.
The Fed does several things, of which I think the two most important are, firstly, deciding on monetary policy. We're responsible for making decisions about the interest rate, which affects the economy as a whole. What we've got to do is try to make sure that employment is as large as it should be, given how much people want to work, and the prices are roughly stable, which means that they don't go up very fast at all, and they also don't go down. That's one of the main tasks. The other very important task is we are the supervisors of the largest banks in the United States. We employ in Washington a large number of people whose job is to supervise and examine the banks. Why do that? Well, because when banks go wrong, the economy tends to go wrong in a big way, and if the banks are seriously mismanaged. Of course, the primary responsibility for managing the banks is that of the managers of the banks. But because they're so important in the economy, and because if the banking system gets into trouble, the whole economy gets into trouble, the government also wants to know that they are being run properly and that they're not taking risks which are going to cause problems for the economy down the road.
So this is the Federal Reserve districts on the map. You can see that the country is divided into 12 different districts, and these different districts are enumerated in black. You can see the circles 1 through 12, and then there are also squares. So we're part of, like, we're in Michigan here, so this is our district. We're District 7. Okay, this is where the main bank would be at. It would be in Chicago. However, the circles represent branches. So there's a branch of the 7th Federal Reserve District in Detroit. Okay, there's not one in Indiana, there's not one in Wisconsin, and there's not one in Iowa. And then also notice that depending on the state, which that would include Michigan, it can be divided between different Federal Reserve districts. So when you're in the UP, they're part of District 9. We here in the Lower Peninsula, we're part of District 7. Okay? Washington, D.C., right here, this is the headquarters of the Federal Reserve. Okay? So these 12 different reserve banks or districts, they all report to Washington, D.C., and it oversees all of these. Okay? Now, the Federal Open Markets Committee, or the FOMC, it's the body within the Federal Reserve System that actually sets national monetary policy, meaning how much money is available or how little are they going to provide. So the FOMC, they make all of the decisions regarding the conduct of what's called the open market operations. And this affects the federal funds rate. And this is the rate at which banks lend money to each other. And then also the size and the composition of the Federal Reserve's asset holdings, like how much money is it going to have in bonds, how much money is it going to have in stocks, how much money is it going to have in gold bars, okay? And then also communication with the public about the likely future course of monetary policy. You can tell by listening to the Federal Reserve when it reports to Congress, like, are interest rates likely to go up in the next 3 months, 6 months, year? And this is important because when you're making a decision to buy a house, you want to know, is now the best time, meaning our prices, not prices, but our interest rate's going to be lower in 6 months, or are they going to increase in 6 months? Because remember, this future price affects behavior, okay? So Congress enacted legislation that created the FOMC as part of the Federal Reserve System back in 1933, 1935 during the Depression.
The FOMC stands for Federal Open Market Committee. It's the Open Market Committee of the Federal Reserve System. It means it's the main decision-making body with respect to monetary policy of the United States economy. That's where the monetary policy decision gets made. There are 8 of those meetings a year. They're a big deal. The markets are watching what we're going to do. We're aware that what we're doing is important for American citizens and that we've got to take into account what the law says we take into account, how much employment there is and what's happening to prices. We really try to figure out where the economy has been recently, where it is today, and that's sometimes difficult to know because data come in slowly, and to figure out which direction it might be going and what we can do to influence it if that's a bad direction. And that's what drives us.
All right, so the FOMC, it consists of 12 voting members, and that would be the 7 members of the Board of Governors. The president of the Federal Reserve Bank of New York is always included. It's the largest bank, and remember, Wall Street in New York City is considered the financial and banking capital of the United States. And then that means that the remaining 4 seats, voting seats, are made up of the 11 other Reserve Bank presidents, and they serve on a 1-year term, and it rotates out. So people aren't excluded. It's just that in any given year, there are 7 of the banks that are excluded, but in the next year, they'll be invited in, okay? So all 12 of the Federal Reserve presidents attend the FOMC meeting, and they participate in the FOMC discussions, but only the presidents who are committee members at the time can vote on policy decisions. So you don't get a vote if you're one of these 7. However, you still get a voice, okay? You just don't get a vote. Now, by law, the FOMC, it determines its own internal organization, meaning Congress can't determine it, the president can't determine it. This is why it's considered to be independent. But by tradition, the FOMC elects the chairman of the Board of Governors as its chair as well. And then the president of the Federal Reserve Bank of New York is acted as its vice chair. Now, the FOMC, the meetings are typically held 8 times each year. It can be more. And they meet in Washington, D.C., and at any other time that they feel is necessary. So here it is. The Federal Reserve System is the central bank of the United States. It has 3 key entities: the Federal Reserve Board of Governors, the 12 Federal Reserve banks, the Federal Open Market Committee, and then its functions are: it conducts the nation's monetary policy, it helps maintain the stability of our financial system, It supervises and regulates financial institutions. It's going to be big banks, you guys, like Bank of America, places like that, not like Dork Credit Union. It's going to foster payments and settlement systems, safety, and efficiently between institutions. And then it's going to promote consumer protection and community development as well. And that's all. Thank you very much.